right now have our panelists. We do have Miss Elizabeth Nkukuu, and I do see Mr. Donald Wangunyu here. So what I would like to do is welcome them into the session, so we can go ahead and just start discussing about this very, very, very important topic around financial planning. It is something that a lot of people, and you will be discussing and telling us, but in my experience, I've seen a lot of people who have not taken this seriously, and so they are not able to actually create wealth the right way. Now, before I go ahead and just invite the speakers on, I'd like to go ahead and just read their bios, and just so that you can have an understanding around who they are, what it is that they do, so that you can understand why it's very important for you to listen in to what they have to say. So I'll go ahead and start with Mr. Donald Wangunyu. He is the founder and the CEO of Fourfront Management, which he'll tell us more about. He has pioneered mobile SME trading years earlier. Fourfront goes beyond to be the first fully licensed robo-advisor in Kenya. Donald serves as the chairman of the board of the Kenya Association of Stockbrokers and Investment Banks, which is KASIB. Donald is also a member of the board of the Nairobi Securities Exchange and the current chairman of Technology Training Committee of his board. Donald further serves on the board Standard Investment Bank. It is a registered is the registered money laundering reporting officer, and he further chairs the risk and compliance board committee of the investment bank. Donald is a member of the Planning and Economic Council of the Dominican Affairs of East Africa and an advisory board member of the East African Forum for Alternative Investments. His broad experience further includes serving as a member of the Capital Markets Master Plan Implementation Group. He has chaired the Tax Lobbying Committee for Successful Removal of Capital Gains Tax in Kenya, as well as the System Selection Committees for Central Securities Depository and the Brokerage Fraternity in the country. Donald holds a Bachelor of Science in Computer Science from Suffolk University in the US, and he started his career at Investors Bank and Trust in the US. He later joined Pagan System US, a leader in business process automation, prior to joining Standard Investment Bank in Kenya. So you can see he has a wide experience globally, and I can't wait for him to talk to us around financial planning and the work that they're doing at Fourfront. So welcome, Mr. Donald. When it comes to Elizabeth Nkukuu, I would like you to go ahead on stage so that we can start this conversation, and I'll read your bio just so that people could understand exactly what it is that you do. So Elizabeth Nkukuu, we call her Liz, is the team leader at Liz Consulting, a firm that is passionate about wealth creation through direct investment and building businesses that last. Liz has close to 20 years of experience in investment management, looking after assets both in Africa and abroad. She has worked in some of the big investment corporates and has run a couple of businesses, learning a lot from both worlds, both the corporate world and the business world. Her combination of impressive professional and academic qualification. She's a CFA, and she's also a CPA Kenya, and currently finalizing her PhD in finance. And she has hands-on experience gained by running businesses, bringing together significant advantage of the theory and the practical aspects of running successful businesses. She's also a recent published author of the book Thrive, a book highlighting a step-by-step guide on wealth creation and financial freedom achievement. So welcome again, Liz, to the panel discussion. And I'd like Donald to also be part of the lobby so that we can have a really good discussion around financial planning. So if we could go ahead and have Mr. Donald back onto the session, that would be great. Thank you. So again, I have read all your bios, Donald and Liz, right? You have a whole lot of experience. I would like to start off with you, Mr. Donald. Could you just tell us, why is financial planning important? Why is it important when we're looking at creating wealth in Africa? Welcome.
So that's an excellent question, and I thank you very much for the wonderful introduction. I feel like I have achieved a lot just hearing what you're saying. Thank you very much. So for financial planning, I think it's important for someone to close their eyes and dream and see hope and to see a future. And in doing that, you're supposed to have an emotional driver that you pick up. And then once you do that, then you open your eyes and then you see where you are today. And then you make a logical progression. And so you need to be able to say, where am I today? What's my life stage? What are my current responsibilities? What's my risk and tolerance? And then you also need to see what you have. What are my assets? What are my cash flows? What kind of money is coming in? What are my expenses? Why do I have those expenses? And then where do I want to go? Right? What does my life look like 5, 10, 20 years from now? And then make that plan there. So I would say that that's the reason for financial planning. Thank you.
Great to hear that. So if you fail to plan, you plan to fail. So if you want to create wealth, you definitely have to get into financial planning. What about you, Liz? What is your thought around why it's very important to have financial planning?
When you think, thanks so much, Wambui, and thanks for having us for this conversation. I think it's one of those things that ticks me. And, you're like, people need to live better lives and the reason why maybe we are struggling is because we did not learn this in school. So it's something that we have to all be deliberate about in making sure that everybody is thinking about their financial wellness. So when you think about a plan, it's really how am I going to get to where I want to go? What is my destination? So when it comes to financial planning, it is a whole journey of where do I want to go? And I keep saying, you have to have a clear framework of where I need to go based on everything that comes in. So if it's my spiritual life, what do I want to be? If it comes to my health, what do I need? When it comes to maybe my career, what do I need? And you cannot do all these things. If it's family even, you have to think about what do I want my family's success to look like? You cannot be able to do this if finances are out of it. I think you cannot be able to run a successful career if money is not a part of it. We cannot be good followers of Christ if you do not have money to give back and also maybe tithe. So when you think about financial planning, it is really at the base of everything that we want to do because it gives us options. It gives us options of what we need to do, and we cannot really run around not knowing where we want to go. So financial planning helps us to take a step back, say, this is where I am, this is where I want to go, and this is how I'm going to go there. So almost like helping you come up with your goals and then itemizing step by step, this is how I'm going to get there. And eventually, how will success look like when I get to the other side? So that is why you cannot do away without financial planning. Thank you.
All right, thank you, Liz. Where do you want to go and what are the steps that you need to take there? I guess then my next question for both of you, and you can go whoever would like to go first. We are all talking about creating wealth, right? Everyone I meet, all young Africans, people in the diaspora, everyone wants to be wealthy, right? But then again, it starts like, okay, where do I start? So could you tell us with each of your organizations, because really we want to take this very practical, in each of your organizations, like for you, Donald, with Fourfront, what are the solutions that you're actually offering so that people can start planning and then they can start creating wealth? And also, Liz, if you tell us what you're doing at Liz Consulting, then we can actually see concretely what is it that people can do, because the essence is whoever is watching this conference will be able to actually reach out to each of your teams and they can start taking up the solution. So maybe you can start, Liz, tell us what exactly you're doing at Liz Consulting in regards to letting people become wealthy. That's what people want.
Great, thanks. Let me start. When I look at the wealth creation journey, one of the biggest challenge we have is about knowledge about things that I don't know. You know, at times you think we know, but we do not know. So one of the biggest challenges is about information. So at least consulting, we took a step back and said, why is it that people are struggling to create wealth? And even if we are investing in the right thing? I think like 2 weeks or so ago, if you read the Kenyan newspaper, there are about 4 million people who have lost money through crypto or something. So the question becomes, how did you get yourself there? And maybe that is the first amount of the batch of that is your first investment that maybe that you took. So if you took your first investment and invested in that kind of an investment, do you really understand the whole journey? So one of the things that we did is we took a step back and said, by the time someone is engaging in their wealth creation journey, let us equip them with information so that they know when I'm calling so-and-so investment bank, this is what I'm really looking for. And one of the things I always say, if you're getting into the investment in the capital market, start with the most riskless asset that you can do. You will learn a lot. When you get your monthly statement with that summary from each of the from each of the fund manager, it actually helps you to know, I need to understand how inflation affects my investment. And you see, if you invested in the money market fund, you're not losing, but you're getting information. If you go to the AGMs or the member educations, it really helps you understand the basics. I think it's one of those things when it comes to investment, we cannot wish away information. So at least consulting, we offer trainings on that. If you're running a business, most of us got into business by accident or because we had to, and we have to make good with what we have. So as you're running a business, it is good to look at people who have been successful before, but it's good to know, how do I create the key pillars that I need to run a sustainable business? So we have structured our course around that. But one of the things is, I will teach you and you'll forget. But if I walk the journey with you, you'll be able to actually identify what are the key challenges and what do I need to do. So what we do is, despite the training, or in addition to the training, we will actually give you the advice that you need and work within the wealth management journey for individual and businesses. But more if you're running a business, you won't have been in this thing for so long. What do I need to do to get it successful? So we also offer transactional advisory, but at the same time, our focus is really business reengineering, because we believe all of us can run successful businesses. And as the keynote speaker had talked about, for wealth creation, I think most of the people have created wealth through entrepreneurship. I was looking at a certain study, about 25% of the world millionaires, they're actually through running businesses. So we cannot wish away that. And that is where we need to create enterprises that are going to grow for the long term. So if you're running a business, we are happy to look at it for you. And then we see, this is what we need to do to grow to the next level. So thank you so much, and back to you.
You're right. Great. So any information, any advisory services, then you are saying people should go to Leaf Consulting so that you work with them on the journey, whether it's in the investment space or even business. You said something very interesting. You said most people don't go into business, they go into business because they sort of find themselves there, or if they have no other alternative. And I always say I'm one of the very few who was very intentional to get into business. And that's because of my background. Everybody who was wealthy was in business. And so I was like, I want to be wealthy. So I started, Regal Africa, and it's been challenging, but it's been very interesting. And I love that experience that I'm able to impact people's lives. So it's great to hear that you are saying, be intentional, come for information as you start on your creating a wealth journey. What about you, Donald? What exactly can you do for people at Fourfront?
Wonderful, excellent question. So the thing to think about is go beyond saving. So if you ask anybody out there, they will understand I need to save. Now, how do I then go beyond that? That's the entire Fourfront journey. And so we provide 3 pillars. There is financial planning, there is transparent investing, and there's a reason we call it transparent, and then there is financial knowledge. And so when we're looking at financial planning, you really have to stabilize where you are. You really have to know what you're doing just to be good. And if you're already in there, we need to make sure that that's a really solid foundation. And then in transparent investing, whether or not you manage the investment yourself or you have an investment manager, there needs to be some level of understanding that gives transparency. So the individual needs to be able to say, I know why I own this, not because my manager says I own that. So there needs to be transparency there. And then financial knowledge, because nobody gets wealthy without knowing what they are doing. Let's face it, right? So let's put that out there as simply as that. You've got to know what you're doing. Now, one of the ways we are able to do this is through an enjoyable experience, because adults are very busy people. They have very many responsibilities. And so you need to be able to keep interest along the journey. And so we add a lot of emotional engagement so that we are helping you continue to grow as an individual. So once you enter our curriculum, and you can take as many years as you want, it can go up to 5 years if you want to. But each step feels like just a different journey that you're going through, that you're learning without having to sit in class, go for seminars, or different things. You learn by doing. You learn by different activities in the system. We then bring in we call them supporters, because in life, especially as Africans, society is part of us. And so there is no point of learning if my friend comes and then dissuades me with some misinformation. And so we say, you know what, bring your friends in, bring your loved ones. Let's see what we can do together and how we can grow a community that supports one another, that keeps you honest. If you say you're going to save X amount of money per month, can we set up a little game that lets us be able to hit our target, so that we keep making the sacrifices of saving today for a better tomorrow just that much more enjoyable. And then as you keep growing, we keep increasing your stages in life. So maybe I started as a serious single, and then met a wonderful young lady, and now I am a couple. And then my first child comes along, and all of these stages are recognized within the platform. And so it continues to unlock different features and different elements of what you need to know. Perhaps Donald over here is a lifelong bachelor, and so I'd never need to know anything about my kids. Or perhaps Donald over here has 3 kids and only thinks about my family and generational wealth. So depending on how you're interacting with the system, you continue to unlock your own personalized journey. Now, in all of this, you get assigned an associate, because technology sometimes feels a little bit standoffish. And so you also get an associate who's walking you and helping you make sure that you're unlocking the right things that you want to unlock as you're going through the journey. So what we looked back, if I was to give our history, several years ago, we said, all of these are available, right? If I am a wealthy man, I can call Anne and she will help me, right? So the question becomes, how do I get to the kind of wealth for which I can afford personalized service? And so what technology does, it allows us to be able to offer the same level of high quality service available to high net worth and all of these individuals at lower values. That's generally our journey that we are on. Thank you very much for the question.
Okay, interesting. So what I got from you, financial planning, which is of course what we're talking about, but beyond that was transparency investing and financial knowledge, which also Liz mentioned. And I like the fact you talked about accountability partners, because as Africans, it's about community. And what I've learned, being a wealth advisor, even when I'm talking to people and I advise them from knowledge, people still go to, I talk to my family, I talk to my friend who are not wealth advisors, and that's why they are in cryptos, and that's why they're losing money, and then all these different things. So apparently community is very powerful. Community is very powerful. So I'm really interested, and I believe the audience will be very interested to see how you're using technology to build community and accountability partners. But before I go to the next question, I really wanted to get clarification on what you said about emotional engagement. Because for me, Donald, when we're talking about investing money, we need to remove, I always say we need to remove emotions out of it, because that is why a lot of people, and I'll take this in the Kenyan context, everybody buys plots because there's an affinity to land, we're Africans, or I want to buy this because, or For me, my clients, someone wants to buy a hotel because they want to buy a hotel. But when you look at the numbers, they really don't make sense. So for me, who's a numbers person, I always say you have to take the emotion out of it. And then now you're making financial decisions based out of the numbers. So in the context of financial planning and what you do at Fourfront, what is this you're talking about, emotional engagement? I think myself and the audience really need clarification around that, the emotional part.
So you're exactly right. But Fourfront is going beyond saving. Now, when we say saving, it means that is sacrifice that you're going to do today. Something that you wanted to buy today, you will forego. And so the pain of doing that, which we all have, has to be counteracted with a dream. It has to be counteracted with something that tells you, I will forego this today for a better tomorrow. And when you think about that tomorrow, it has to be so real. You need to be able to taste it, to feel it, to touch it in your mind, so that you have the emotional engagement to be able to start the journey, to be able to start putting money away. Otherwise, we all know that my expenses will increase with my income. So how do I keep my expenses down? I need that emotional engagement to be able to say, I actually enjoy putting this money away. I enjoy this sacrifice because I know what's going to happen tomorrow. When my child tells me they want this thing and I tell them no, and I know it hurts to say no, that must be balanced with an emotional goodness on the other side of it, right? And so that emotional engagement on the dream that you're going for must be engaged. Now you start putting money away, and then you start getting into the investing side of the business. Once you get into the investing side of the business, you kick up one level of knowledge, which now brings in exactly what you're talking about, which is, okay, now we need to make our money start making money for us. For that, you do not want any emotion. So that's the balance that we talk about, because a lot of people do not have that emotional balance in the beginning to be able to sacrifice, so that it's an enjoyable experience to sacrifice to grow the savings. Does that make some sense in terms of what I'm talking about?
Yes, it makes sense. Sacrifice for the better good. In fact, for us at Regal, after we keep talking about family wealth, we keep saying we need to go back to the African way. We are community, we're about family. So I understand this. I will sacrifice because I want better for my children. I'll sacrifice for the next generation. So that's how you start with the dream, with the vision. But then now when it comes to the actual work is when now you remove emotions out of it. Okay, that is great. I'm excited to see Irene. She is also the moderator for this session. We just went through the introduction and what exactly this consulting does. Journey. So Irene, welcome to the Africa Wealth Conference, and you can take it from here.
I think I was on mute. Thank you, everyone. I had some technical issues, that's why I'm a little bit late, but I'm very glad to be here. Donald and Liz, it's good to see you here. My name is Irene Gathiaka. I'm the founder of Nairobi Business Forum, and I'm also the Africa Director at Total Impact Capital. We finance impact investments in small businesses. And so you've done the introductions, but you haven't started with the session yet, have you? Lisa,
yes,
I can see you
we were having some great conversations around what exactly each of their companies does.
Each of their companies does, exactly. That's a good place to start, and you started off with a very good topic, because when people think of financial planning, if you're starting out, Liz, then I'll go to you and ask, what comes to mind when you say financial planning for a beginner who hasn't got much money and is thinking, I could get started here, but it's a little intimidating. What's the go-to first few steps before we get it all too complicated? What do you think of that?
when someone is starting off, I look at it in terms of financial planning. First of all, is to create a discipline. You need to first of all start about asking yourself, how do I create a discipline to get to where I want to go? And that is where budgeting comes in. And when you look at a budget, in my view, for you to create the discipline, you first have to look at your expenses, because it's not that you're going to get wealthy by cutting your expenses, but it's going to help you know the sacrifices that you need to make so that you can be able to grow. So when I think about financial planning, it's really starting point is, what is it that I must do to get by without necessarily living like a pauper? There's a team I was speaking to, and I was like, oh, first of the question was, how do I make wealth without living like a pauper? So you need to have a balance, what really matters to you. So even as you look at your expenses, it's good to put that in mind, because you do not want, again, to actually push yourself so much to the point whereby you did not live. You know, you get to the end of the world and you're like, okay, fine, I did not live my life anyway. So the financial planning for a beginner, for me, it starts with the financial plan, the budgeting side. And we could really think about, how do I allocate my expenses? But to be fair, when you're starting off, maybe you just have your internship salary, or maybe you're just starting off, it's not easy to put it at that point. So it is good to know that as you go along the journey, that's when you'll be able maybe to fit your total expenses up to a certain point. Then once you're done with basic expenses, now you can move to, how do I increase my income? Because the wealth.
Yeah, now I'll come to that, because it seems like you're touching on the next topic. And Donald, I'm listening to this and I'm thinking, it's difficult in a normal season when things aren't so difficult. But there is today, where a pack of flour, at least in the Kenyan space, was 120 shillings. And today it's at 100. For somebody who says, I make so little money that there's not even enough left for the month, let alone saving, what do you advise?
That's an excellent question, and I think there are very few who say I have made enough money. You know, it's a human condition that our expenses will continue to grow with income. So for us, we tell you, first, have a dream. That's the thing that will drive you. Have a dream that is so clear in your mind that you are willing to jump through whatever you need to jump through to get there.
Okay.
Open your eyes and then make a plan to get there, right? But let the emotional engagement drive you forward. Once you get there, then we get into exactly what Liz was talking about. The emotional engagement will help you create habits, right? So if I used to go out every Friday, I stopped going out every Friday. If I used to buy this, let's put a really harsh one. I used to buy milk for my coffee. Now I can leave the milk out, right? So now we are creating habits that will allow us to release some funds to move forward. But it has to be an enjoyable experience. That's the key. If I feel that pain every day, within 3 weeks, I'll let it go. So build an emotional dream that allows you to build the habits that allows you to get to where you want to go in a structured form.
Okay, thank you. I know you've done a few of these questions, but I wanted to ask, what do you do? The African values are such that no matter how little you're making, there are always dependents that want to make you feel that perhaps it's an expectation even of yourself that you have to help and provide for the family, especially for African firstborns or first sons. These days, it's even daughters. How do you stay on track with your financial goals? Because you said have a dream. Okay, I'm doing that at my personal space, but then there's this family that expects from me and I still need to save for the future. How do you advise us to start without alienating ourselves from families?
Is that for me?
Yes, it is. Yeah.
Okay, wonderful. So yes, there's this thing that is called black tax. And so this happens everywhere, and it's a real thing, and it's you know, we think of it also as Ubuntu, right?
Yeah. Yes, it is.
What in fact, I was just talking to someone a week ago who pretty much decimated his entire life savings because his father figure was diagnosed with cancer, and then I said, yes, there are responsibilities, but you need to structure your finances so that you have a bucket for that. It cannot decimate you, because you have to think of a time where if this individual was still sick, but you had children who you had to pay school fees, would you forego their school fees for this person? So it's a question of being able to bucket, so that when you say I have no more money, it doesn't mean that I don't have any money in the bank. It means that I don't have any money in this allocation of my finances. That's the general idea. And then getting into the emotional conflict that someone has also comes with being told it is okay. It is okay not to decimate yourself for that activity, and you are required to survive beyond an event.
Okay.
And so hearing those words is important. Thank you, Irene.
Thank you. Thank you. Elizabeth, before I come to you, I'll ask the audience, keep giving us your questions so as we go, so that the panelists will answer them as we progress, so that we don't have too much of them left at the end. We will continue going. And so Elizabeth, then I'll come to you and say, you're in Lease Consulting, and I'm sure you've seen starting points of several people. What are the simplest vehicles that you advise for people to start off on? Because the first thing we would ask is, do people even go to financial advisors? And then if the few that are coming through, what do you usually advise so that we stay on track and we can make it a habit as we grow in our financial education?
Thanks, Irene. When I think about investments, generally, for me, the starting point is investing in self, because once you invest in yourself, then you'll have you'll be able to move forward. So do as much as possible that you can to invest in yourself. I'm not saying that you finish high school, you finish campus and go to do a master's. You really do not know what mastering you are doing. That is not what I'm talking about. I'm saying really look for information as much as possible. I think one of the things like attending such a webinar, it's not expensive, but the amount of information you will get is a lot. Once you've done that, then investment is a journey. Do not expect to run before you crawl. It is good to take the steps to learn. And one of the things is always, what is it that I can invest in today? I learn as much as possible what the way investments operate, even as I expect to grow my world and I am able to actually get into more risky assets. So understand the key fundamentals of any investment, the risk, the return, the liquidity. Once you have done that, the return is what I'm going to get. The risk is how probable that I'm not going to get back my money, and the liquidity, when things happen, how is it for me to get my money without necessarily losing value? So the starting point is always to get invest in the investment with the least risk. And I think in my mind, the thing that comes in is really the unit trust. Start with the unit trust, understand what they are investing in. Do not go to the unit, in my view, again, do not invest in unit trusts that have risky assets. So money market is always a natural place to start. You can go to fixed
Liz, on that money market one, how do you, even as a beginner, do some homework or some 5 ticks to say, this is the ideal money market fund for me? Because even with good intentions, you get into some and you find that it's not aligned with what you were hoping for. How do you get to a place where I'm saying this is money market, it's well structured, it's safe enough? What kind of ticks do I need to go through as a beginner to make sure that at least I'm starting off on the right foot?
If you look at the money market fund, the way it is generally regulated, unless something really happens, the regulations tends to be the same and it cuts across. And if there are issues in any of the money market fund, you'll definitely be able to tell that from the Capital Markets Authority. So it's one of the things that I say there. It's looking at the brand that you would care for, or the brand that aligns to your values, and then that is what the direction that you go. But the beauty about money market fund, the information is all there. You just need to go to the newspaper and see this is what is coming up. So ask yourself the hard questions and then go with the one that you would like to go with. Because in terms of the return variations, at times it's not so much to warrant maybe going with one brand or the other. So there I would think about, in terms of regulations and in terms of the framework of the money market fund, they generally are the same if you're talking about money market. There are other funds that are asset specific.
Yeah.
So maybe I'm investing, I'm really looking at a fund that is highly invested, maybe in real estate, in private equity, or something like that. Let me first understand the operations of the underlying, because the biggest challenge we have in investment is not understanding where this money is being put. So if you are going to invest in an equity fund, understand the dynamics of an equity fund so that I understand the risk. So that for me would be the second level of investing. So once you have already started with money market, understand general operations of the macroeconomic and how assets are how asset returns are done, then that's where you can go to very specific sort of investment. So when you're starting off, maybe to start a savings culture, you could join things like the circle. And the circle is not really an investment per se, it is a savings product.
Yeah.
It's a savings product, not an investment product, because you're not going to get returns that are great, but it will help you create a culture of savings. Then once you get from there, you can go to the money market funds, and then now you can go to the asset specific. So that is the ladder that I would take. Again, do not rush the process. Do not rush the process, because you have to learn each of these things and how they operate.
Perfect. And Diana is asking a question which actually sits well with our next question, Diana, because we are getting started now. Then the next step would be a simple enough but well-diversified portfolio. What does that look like? How do you do your diversification so that you're not, like Elizabeth said, you're not asset rich and cash poor, especially when you need the money? What does that look like for somebody who's just starting out, and how do you carry on rebalancing as you go along?
All right, excellent question. So what we would tell someone to do is first get an understanding of the financial industry. So this is your money, even though somebody else is running it. So get a high level understanding. So that's the first part of building a portfolio. Understand the industry. And then after that, understand the assets and the companies, just like Liz said, that one is going to invest in or looking to invest in. And we're not talking about, analytical understanding unless you're going to manage it yourself. What you need is a high level understanding. What's the unique selling proposition of this company? How do they generate cash? What are the risks for a particular company? Once you do that, then you need to understand the investment philosophy of the manager. How do they buy? How do they sell? What are the parameters that they look at, right? Once you do that, then now you have enough information to be able to build your portfolio by blending your life stages, which is where you are in life, your liquidity requirements, how quick you need to be to cash, along with your investment goals. What am I trying to do? So if I'm 22, and I know I'm not going to touch this cash for another 40 years or something like that, as an example. And then understanding the risks, because you understood the industry and the underlying companies, right? So don't just take the statement, it's diversified, to mean, we've invested in 7 banks. Well, you're still concentrated in banks, right? So you need to put in your life stages and your responsibilities, along with your goals, and then along with a high level understanding of the companies that are put in. Once you put these 3 things together, you wouldn't actually need any training beyond that to be able to say, yes, I am confidently diversified. That would be my answer. Thank you.
Yes, thanks. And to that, Elizabeth, then I say, how do you, because when you're starting out, I think there's a misconception that the process may not cost you anything. It costs a little to get financial planners like yourselves. It costs some tax, and it costs the unit trust some fees for managing your money. How do you incorporate all of that into your portfolio? And then how do you cater for things like taxes and insurance, and make sure that you're not overstretching yourself in any of those areas?
Thanks, Irene. When you're coming up with your portfolio, and especially, let me just go back to the unit trusts.
Yeah.
Good to know the return that I'm getting. Is it gross of the fund manager's fees or net? So that if you're looking at your return, you really know what is going on. And when you're starting off, again, you might not have the money. And actually, I don't think it's necessary maybe to have even a tax consultant at that level, because the tax that you're going to get charged is really, you already know it. So if it's a fixed income investment, you know it's 15%. So you might not need to get through that that kind of what do I say? You do not, that advice does not make sense. You're not going to pay for it. But it is good to know the returns that I'm going to get. Is it gross? Is it net? And what does it mean for me? What is going to come to my pocket? So if I'm getting a 10% return, that is, the question is, what is it that I'm going to get at the end of the day credited to my account? Then ask yourself, are there alternatives? Because you see, once you've already identified, this is where I want to go. There are various alternative courses of action that you can undertake. So if I'm starting again, do I place this money in a fixed deposit? What am I going to get? And who is in, what are the shenanigans that come with all that? Or do I just maybe simply say, let me put this money in a money market fund. The fund manager will file for me my withholding tax. So for me, it will be much, much easier in terms of management. So understanding the operations of each of these funds is important, but I still go back to money market funds or pooled funds. Not, let me just say pooled funds actually make your life much easier. Remember, at that time, as well as you're starting, you also maybe are starting your job, so or you're starting your business. So you also do not have a lot of time to allocate to understand this. So as Don had said, if you're investing in the equities market, it is very difficult for you to run a model of Safaricom today from scratch and say this is the way to go. That is why the advisors are there to charge you the 2% or 1% fee, and they're going to make the right investment decision for you. You cannot, the amount of money that you have 100,000, how much can you diversify to make a difference? So why can't you buy into a diversified portfolio anyway that is going to help you gain from diversification, but you're not doing it yourself? So alternative courses of actions are there, and it's easy to get them and to get the right advice to do it at very minimal cost, I think.
Thank you, Elizabeth. And because of that, now, Donald, I'm thinking, okay, I've started my journey and I have this lump sum that's coming to me. And we all have stories of people who got a bonus somewhere and they went painting the town red and they go home depressed because they've wasted everything. How do you get to, I've saved a little bit of money. It might have been easier than I expected. So how do I now get to the next level of meeting my goals? Because you did talk about goals. To make sure that I'm not spending the lump sum that I've spent so much saving and depriving myself, what's the next level after a certain lump sum to make sure that I'm not going to start buying the biggest Gaslas and, you know, clothes that, you know, instruments that don't even give you any kind of return? How do you progress to making that kind of money work for you or give you assets that are actually appreciating?
That's an excellent question. Thank you very much. I loved how you said we go paint the town red.
Yeah.
But let me just add a little bit to your previous question to Liz. So the problem of cost is one of the solutions for robo-advisory, where you get high quality service, even though you do not have a high level of portfolio, by working with a lot of the technology. Now, to answer this question, I think we break it up a little bit, because we are on a journey. And so when we talk with someone, we tell them, all right, let's first create our first little goal, right? So let's take this amount of money and let's pick something. You know, either let's pay down your debt, or let's work towards your first car, or let's pick something where my vision of that thing, of how my life will be, is more enjoyable than spending the time today in painting the town red, as we put it. Right? So that's the first level. Once you are able to achieve that first goal, then your entire world just opens up. Now you start really thinking big. You know, I want to have real estate. I want to have, you know, because you've seen the success, you've felt it. You said, you know, I can do this. The second thing we make sure is we also tell you, let's look around at who your relationships are. What's the group of people? Who's the girlfriend who told you, you know what, we have to go out today, Irene. We just have to go out. We have to blow this check, right? And we say, all right, let's get that group of people as well, getting some education, so that when you're discussing, you're reinforcing one another and you're being able to keep each other accountable to what you're trying to do. So once we manage both the individual steps, so that you can actually feel success as you're going through, we're able to help you create a dream that gives you the emotional connection to be able to do it. You're then able to build the habits along with having a supporting community around you that doesn't deter from you, the sky is the limit at that point. That's exactly what you want.
Yeah, before you go down towards that, then we have this lump sum. It's being managed by money market fund managers and consultants like yourselves. Well, you're never really safe, and that's why we take out insurance. We are not trying also to spend too much money on protecting our finances, because that's the money that's going towards saving. What kind of insurance would we look for money market funds or other such vehicles that say, if something were to happen to this money market, there's a fallback plan?
You're talking about insurance on the money market fund?
On the money market as a group, because I don't think that you're going to be insuring it yourself. So to look for, give you peace of mind, be able to sleep and say that if something were to happen and it fell apart, what's my protection in such a vehicle?
Okay, excellent. Let me touch on insurance, because that's a big one. Statistically for us, 60% of the reason why people break their investment is because they don't have insurance. I mean, it is just a fundamental step that one must take. So now if we put that aside, which is insurance for ourselves, and then we're back to the black tax discussion, which is we're doing Harambes because somebody else didn't have insurance. Once we remove that, then let's talk about the fund itself. Liz mentioned, these are highly regulated entities. And so the idea that your money is unsafe because the fund manager is unsafe simply doesn't exist. The vehicles are separated quite distinctly. They're audited every 3 months. There are different entities holding different pieces, so one entity cannot really come down. And then the regulator has what's known as a risk-based inspection model, right? Which internally they run calculations, and they are able to focus more attention onto, shall we call, what they would consider riskier businesses. And so that keeps the level of resource concentrated on exactly where it needs to be concentrated at. When we get into trouble is when we have unregulated entities or entities that are regulated outside our jurisdiction. So it could be regulated, probably in the US. Well, that's not under CMA. And so CMA is not looking out for it. So as long as you understand that it has to be a regulated entity, regulated in what jurisdiction, then you get into really, really comfortable assets.
Oh, perfect. So Elizabeth, now that we have that money side, but we know our communities, we've gotten into this habit of borrowing because there is easy access online, you know, kind of digital borrowing, even to the banks that you go to the borrowing. And I think people don't quite connect that you will have to pay this money back. And there's interest attached to it, no matter how well it was sold. And interest varies depending on who it is that you're borrowing from. And this could affect your goals, the same ones that Donald has, you know, explained so well. You don't want to puncture that just by borrowing for things that you could wait. How do we, A, reduce the borrowing, and 2, make sure that if we are borrowing, it's the good kind of borrowing? What would you advise us to consider?
So when you think about debt management, there are 2 levels. I'm either in a debt situation or I am okay, but want to grow. So one of the things that when we hear debt, most of the time we go to bad debt, you know, like we always have this thing that we associate debt with really bad things, but there are also good success stories about debt. So I think the starting point is, again, conversations about what can I borrow for? I think there was something I saw online that, and we all have the different business models. So just the caveat I put in. So I'm borrowing. If, for example, let me say something like Victoria Courts, they have really nice furniture and they want you to borrow and then pay on the go. So you see, it's very enticing because, I will have a nice, the house will look better, well polished, but at what cost? Because it's not coming in cheaply. So I feel like it's that conversation that we need to have and tell people, you know what, you cannot borrow for consumables. That seat depreciates immediately to get out of that of that showroom. The reason why I do not want to use a car as an example, and that was I've always been used, it's because at times the car is a necessity. For you to be able to get from point A or to deliver the service that you need that car. So it becomes a significant part of the value delivery for you. But for a seat, there is no way a seat can ever be an investment. So having that conversation and telling people, you know what, you can only buy consumables using the money that you have saved for. And it's also not so difficult to save for it. I'm a strong believer of goal-based investments. It is good to have a nice seat, but it can wait for 3-4 months for me to be able to save for it. I do not have to pay an extra shilling so that I can own it. So one of the biggest problem of debt is the feeling to belong. I want to be like Don. I cannot be Don forever. No, I can learn from him, but I cannot be him. So one of the biggest problem on debt is actually that urge to belong. So I think more conversation about being real to yourself and knowing this is where I want to go. And then bucket your savings and say, once I get to these savings, then I'll be happy and I will have achieved ABCD. So goal-based investment is the way to go. And remember also to celebrate the small wins. So like, for example, I want a seat. I don't have to borrow for it, but the day I buy it, it is good to draw a bash. You know, it is cost me another extra 10K, but those celebrations make you actually more disciplined to move on forward. So, but debt, my biggest problem with debt, I think we are largely influenced by the people that we sit around. So I think that robotic that Don is talking about is the way to go, so that we surround ourselves with the people that will influence as well.
And Don, to the same question, if somebody's life is already on the other side of debt, like they have already accumulated too much, would you advise them to save as they pay off the debt, or first pay off the debt and then start saving? Because there's got to be a formula that works, that doesn't break your enthusiasm in starting this journey of creating wealth. How do you do it right so that even when you're paying debt, you don't feel like you're just making money for someone else?
That's painful, making money for someone else, isn't it? So the first thing we'd want to know is what was it that got us to this situation, right? Was it like, for instance, this gentleman, there was a catastrophic event, or do I simply live out of my, above my expenses? And so before we even talk about anything else, let's first fix that. Let's understand that. Let's correct that. Now, once we have that, we then need to understand that sacrifice is required. And so we will need to live below our means, right? And then that's when, as Liz, thank you very much, Liz, who are your friends? Do they constantly give you the urge to grow above your means? Your spouse, your kids, which school do they go, and does that force you to go above your means? So we take care of that, so that now we say, all right, we've released an X amount of money, and now let's discuss what we want to do. Now, if this amount of money can give you a higher return in a particular investment than what you're paying in interest, then the answer is investment. If not, then the answer is interest. And so that becomes quite a plain decision point. But that's the third step. First step is to really work on the person to understand the underlying reason why they were in the place before, and then to look to make changes there. And then release money, which, we need to be honest about the sacrifice about doing that and making that an enjoyable experience through the right dreams that you have. And then after that, it's put it on a spreadsheet, calculate exactly, one is 3% more than the other. That's the decision. I think that's
thank you. Yeah, thank you, Donald. And as we get close to finishing off, this is creating wealth, and we're still Africans. It's the African way. You're creating wealth. How do you align your goals with perhaps those of your family members who might be vested in this? Because you don't want a situation, I'm sure we'll talk about this maybe as we go on, and it will come up as a session on its own, but you do want to make sure that if you're building wealth, and you have these family members around you, even if something happened to you, your dream doesn't die, or even as you're living, that you're not squabbling and fighting over the maybe you inherited the money or you made it yourselves, but together as a group or a family. How do you make sure that such relationships are guided by clear principles so that you leave, like you said, emotions out of it? It's for you, Dan.
Excellent, thank you for the question. So as you're growing through, you get to a certain stage in life where you start unlocking knowledge for dependence.
Yeah.
And these are, so you need to have your children start learning some of these lessons early. You know, maybe some chores need to be paid, some chores are unpaid, so that they start understanding the value of labor and the value of work. They also need to be some that are unpaid so that they can understand the value of charity and the rest. As they go on, then they need to, and Liz talked about it, they need to understand tithe. You know, there's some programs where, you know, for every 10 shillings that they donate, the parent adds some money to that, and then you can buy a packet of unga, as you mentioned, for a street child of their age, so that they can actually feel the engagement there. And then as you go on, you get into the patriarch and matriarch era, where you start looking at tax efficiency, you start looking at building constitution for the family. Who are the decision makers? How will they be making decisions? In what cycles they'll be making decisions? How are people going to be able to have agency in their own lives to be able to work through their dreams, but still get help and support from the family? So there's a great family capital building mechanism where if we are one family, let's assume the three of us, I want to open a clinic, right? The family can give me a loan at 0%, which makes me extremely competitive. And my objective is to pay back the family so that we continue to grow that family fund, and so will my kids use it and their kids. So you can create different structures, but there needs to be family constitutions, and then there needs to be an understanding of how these funds will be, and then do it ahead of time. You know, it's not when Donald starts getting a little bit of pain in his chest that you start doing it. You know, it's a journey. You know, from the time kids are born as they grow up, so that it's a very natural process for the family.
Thank you. And ASEAN has joined us, which tells me that we're probably running out of time. And so I'm thinking, what are the 5 principles that we can take with us today, Liz, to say that I haven't started? These are the 5 things that I should take away from this seminar that say I am at 0, but by the end of the year or 2 years, this is what I should have done. What are the 5 and the wins along the way, how to measure that very, very easily and continuously. Liz, I think you're on mute.
Yeah, so I think the starting point is awareness. The starting point is to know that I know or I don't know. And then once you have done that, gain knowledge. So I know that I don't know this, so let me look for information about it. The second point now is review of where you are. Understand where you are, so review where you are today. This is what I need, or this is what, almost like what I would call, come up with your balance sheet. You're looking for your net asset value. You're really understanding this is what I have and this is what I can use it for. Then the second part, after that, then you go to review where you want to go. So set your goals. Set your goals. Once you've set your goals, start executing, because the problem that we have as individuals is that we know this is where I want to go, but I am really not moving. So execute. I want to open a money market account. Let me not wait until the day I have 10,000. I can start it today. Let me start the process today so that I can proceed and now start growing on it. Then once you've already executed, you can be able, after a period of time, always have timelines to review your goals and how far you've come. So review is important. And it's okay not to have gotten to your goals, but you are actually able to say, this is where I went short. So awareness is important. Seek information, come up with your goals, look at the courses of action and execute, then review. Constant review is important. The reason why I put that together is if you are able to do those 5 things together, you will be able to know, I need to do my tax planning, I need to do my wealth planning, because they all fall around your goal setting. So maybe just to summarize, all that is captured in my book, Thrive. It has really different things in terms of how to need in your goal setting. So you can always be able to get that through Seller. Thank you.
Perfect, Liz. And Don, I'll ask you the same question. What do we take out of this session as a starting point to make sure that this is not the same conversation we are having next year?
Thank you very much. So that's why Fourfront calls it beyond saving. So there's usually a financial trigger that happens. There's something magical about the age 25. I'm expecting a child, I'm about to get married. There's usually this financial trigger. So the first thing that we ask somebody to look at is first recognize that trigger and celebrate that you've moved to a different stage. Then also look at who are the friends, who is the community around you that may not have hit that trigger and may be a drag on your thinking. Once you do that, then you start getting into make a simple budget. And the more exciting you can make that process, the better, because budgets are where everyone just dies off because it's a really mundane activity that you have to do. So, set up little games with your friends. We're trying to save this amount of money, have it some transparent so that, I hit my goal. Did you hit your goal? How do we help one another there? Once you're able to set up a budget, go for and you're able to hit this first success parameter. Now you can create your net worth, so that now you can really get using that feeling of success, calculate your net worth, and you can have services and help to do that, and then create now a real goal. Now go for the sky. Knowing that you can do it, shoot for it. That's what we would say, and let the dream be real. As we try, we say, smell it. You gotta really touch it.
Touch it as you dream. Don, and before you go, I'm getting a question that most people that were interested, and this is for you, Liz, as well, very quickly. Most people that are interested in this session are male. So the first question that comes to mind is that don't women like to plan, and should men plan differently from women? Because it seems like men are more hungry than women are. I don't know what the message this is sending, because it seems like it's male and a little over 35. Is that a trigger, like you said?
I'm actually surprised. I thought ladies would join more on the personal financial planning.
Yeah, because we are so many of us in Chamas. We are so many of us in Chamas that we kind of lead when it comes to small savings and starting small. I'm surprised that this is, that's different. So what would you advise then? Male over 35, few women, should we save differently? Should they save differently?
I think, like Don said, age is a factor. Let me talk about myself. I think when I turned 40, something just was like, hi, I'm in the last half of my life, So something just comes in and I need to put my world in order. So I think age definitely plays a big role in terms of what you need to do. And I think at 35, really, you are really trying to, you have kids, you have family, there's a lot of things that have changed in your life that you need to actually put in order. So the financial planning conversation mainly comes in at those ages, in my view, not only because of the family circumstances, also your earning power has increased. So at that point, you're like, no, I have money to plan, sort of in the mind. But for me, the surprise is that I thought ladies are more inclined into wealth management, but maybe it is, that thing of, it takes time. There are also very few ladies, maybe in the formal, whatever sector. So it's one of those things that maybe we need to look at and as ladies and say, how do we champion financial wellness for ladies across the globe? Because then this is a big challenge. But in terms of, because I run weekly trainings, it's a little bit different in my view, because I always find more ladies logging in more than this. So it's something maybe we need to do more work on. But yes, do they have to have different, should the financial plan to be different? I would not put it different by gender, but I would put it different by our life goals. What do ladies really want to achieve as opposed to guys? And that is what would guide where we want to go. So
thanks, Liz. Yeah, Don, the same question. Are men more hungry than we ladies?
That's an excellent question. We actually studied that problem statement for quite some time. So we find two particular items. first is, as Liz said, there's the goal. The goal is a little bit different. And so when we look at, let's say Kenya first, there's a really high single parent home. And that usually affects ladies more than men. And so one has to create a curriculum. And when we actually did that, we actually created a module specifically for that situation. The second problem that we find is because of the husband-wife dynamic, we find that there's quite a number of families that do not actually have a financial discussion. And so the husband goes and does his thing, and then the wife hopes for the best. And so one of the solutions we have is a way to trigger these conversations internally, a way to trigger the conversations of, all right, what are we really thinking about? Yet help the woman maintain a safe, respectful air to the question so that she doesn't feel at risk in asking it, but opens up the discussion. And so once you are able to start opening up this discussion and being able to layer it on in a safe environment, and as that safety continues, we find that the woman quickly just starts paralleling through the process. The third that we found is that people have a different financial knowledge level. And so we need to be able to provide knowledge at each person's individual level. So I am in finance, my wife is a musician. Now we need to talk about finances, right? Where do we begin? And so what we needed to do for our platform is we needed to separate that discussion out. And so we balance it out so that nobody feels as if they are being intimidated. No one feels as if they're, I just don't know what is happening. And eventually, after several sessions within the platform, the conversation just becomes rich and deep. And then now you start really seeing the woman because she really has a lot of concerns that she's unable to express. You really see that coming out in the feedback. So I think for us, we've studied it quite well. We hope we've solved the problem. And karibuni sana, all the names.
Yeah, well, at least you're the good example that you're showing us. It's okay to, first of all, like you said, seek help, learn about the different investments out there so that you start off right instead of hitting and missing. And so I think Anne will advise us on whether are we good for time? Because I'm thinking we could give one closing statement from Liz and one closing statement from Don, and then we'll ask that anyone who has questions, they can stay a little bit in the lobby so that Don and Liz will answer any questions that they do have. So closing remarks, Liz?
Great, I will just read a quote. Financial freedom can only be achieved by a conscious choice. It's not an accident. It's not just merely by thinking, it's through grinding and doing what is necessary to get to that goal. So you have to decide that this is what I want to do, or this is where I want to get to, and then wake up every day facing that direction and make sure that when you have to change, you can change, but make sure that you are waking up and pushing towards that direction. So thank you so much, Anne, for creating this. I think it, in terms of awareness, just knowing that this is what I need to think about is important. And that is the first starting point for all of us. So thank you so much. Have a blessed day.
Don, some few remarks that we can take, and so we know not to go painting the town red.
Wonderful. Yeah, so let's start with I'm going beyond saving. I've started a plan. Don't be too hard on myself. Make it enjoyable. Just keep growing with it. Make sure that you do keep growing. Have the right people around you, and you will succeed. And you will succeed with a smile. And it'll feel easy, even though it's a difficult work. It'll feel easy, but as long as you treat yourself fairly, you have that balance, and you have a dream. That's the key. That's what will drive you forward. And so, thank you very much, Irene, and thank you very much, Liz. I really enjoyed our session. Thank you very much.
Thank you, both panelists. That's a wealth of information, and it's funny, even for someone like me who's been in the space. You still need reminders that tell you why it is that you're doing this. I'm sure Anne would agree. Anne?
Yes, thank you, Irene, for a great moderation. Thank you, Liz and Donald, for those insights. I was really paying attention because I keep saying financial planning is the foundation, right? Without a good foundation, there's no way we can rise up and create wealth for the next generation. So it was a really great insights. So I thank you all. And for the audience, everyone who's listening, if you need any advice, go to Leaf Consulting, go to Fourfront, using technology, which I think is a beautiful thing. So thank you very much for all taking your time to share with us the information that we need.